Hi, my name is Kenneth from Keyquest Mortgage. So today we will be covering what will actually disrupt your loan application. Why are we doing this video today? Because a lot of our clients have the following few problems that we want to share with everyone, and especially you watching this video. Why? If you are in the process of applying a bank loan soon, these are the few things you want to be aware that might potentially disrupt your loan application. So some of the common problems we see that our clients do not have very healthy credit bureau scoring, and maybe a high credit card usage and a change of employment. So we will dive in depth today to share with you how these three areas might potentially affect your loan application. What will actually contribute to a poor credit bureau? Number one, what we commonly see is that every year the banks will actually charge a annual fee as well as maybe GST on the credit cards. And what most people commonly do is that they will actually call into the banks to waive off the charges. Okay, but what we see a lot of clients is that they actually choose to call in and they did not pay the credit card annual fee because they're concerned that if they pay the credit card annual fee, the banks will actually charge them on their annual credit card fee. But based on our experience, most of the time, if you pay the credit card fee with whatever your outstanding bill is, the banks will actually credit back the annual fee charges into your credit card. So one of the common things we see from our clients is credit card annual fee, which most of the time the banks will actually waive off for you. But what a small portion of our clients did was that after calling in to the banks to seek for the waiver on the credit card annual fee, they did not pay the difference. They only pay whatever usage they have spent. This actually creates some problems for some clients. Why? Because there is also a possibility that when you call in, the officer took down, but it takes time to process. And by the time the banks actually process for the waiver, it will be on the following month. And you will see that, oh, my following month statement, because I did not pay for the annual fee, it actually roll over to a late charges. That becomes a bigger problem. And then that's where the dispute starts. You will start calling back the bank saying that, oh, why are you charging me this late charges for which I already called in to waive off my annual fee. And sometimes because of this dispute, it takes 3 months or even 6 months to clear. So my recommendation is that always, if you have a credit card annual fee charges, always pay in advance or pay as per what your bill is. Say for a waiver, just take note that the following month the banks has to credit back. Do not pay your credit card bill without the annual fee charges. That will actually create a lot of inconvenience for you later on. Another common thing we see, high credit card usage. If you are someone who actually spend 20 to 30,000 a month on your credit bill, maybe you are a business owner, or maybe you have high spending on your credit cards, which for purchasing stuff for the company, all this will actually result in a higher minimum payment. So a lot of customers didn't know that even though if you pay on time every month on your credit card bill, but because of your high spending of 10 to 20,000 or 30, 40,000 a month, your minimum payments will no longer be $50. It might be higher, maybe in few hundreds, or if your spending is even higher, it might be in thousands. So the banks actually take in this minimum payment as your liability. So if you are going to purchase a property soon, okay, you can still use your credit card. Even you have very high spending, that's fine. What you can do to prevent this is pay in advance. Okay, what do I mean by pay in advance? Example, if you look at your credit card statements, every time when you see the statements, the statement date is example on the 1st of the month. So what you should do is, even before receiving your statement, and you know that the statement date is dated on 1st, before 1st of the month, you have already logged in your internet banking, pay off, okay, your credit cards. If you do not have internet banking access, no issue. You will know roughly how much you spend every month. Just pay in advance. That means if you know that your spending is 20K a month or 30K, just maybe put in 30K and let it slowly deduct, so that your next cycle when you receive your credit card bill, the minimum payment is 0. That will actually help in terms of your loan application. So if you have applied personal loan or balance transfer or any kind of cash advance facility for the banks, a lot of clients not aware that this will actually affect your credit scoring. Even though you pay on time, your credit bureau reports, everything is A. I do see before clients, they pay on time their credit cards, their personal loans, their balance transfer, their cash advance, but their credit scoring is BB or CC under credit bureau scoring. That actually affects you when you're applying a housing loan, because the banks will be finding very puzzled. Why is your credit scoring not AA? Because you have been paying on time. So the only conclusion the banks can take it is that maybe before applying your housing loans, you have some personal loan credit cards. All this will actually affect your credit scoring and will actually drop your credit scoring. So if you're applying a housing loan, make sure that do not apply any personal loan, or if you have already a personal loan, try to pay off in advance or pay advance on your credit card bill. That might potentially help you to increase your scoring back to AA. And what we see commonly is when some of our customers are applying housing loan, they are very prudent. So they actually went to purchase their own credit bureau report to see whether their credit scoring is healthy. Okay, this is something which we don't recommend you doing as well, because doing a self-check on your credit bureau might affect your scoring. Or the banks might look at it this way: why are you purchasing your own credit bureau report when you're buying a house? Is it that you have some bad debt? You want to make sure that at the point of time when you apply the housing loan, the bad debt has not been reflected. So it's not wise to purchase your own credit bureau report to see how's your scoring. You can always do it with a bank when you're applying a housing loan, and the bankers, you can always ask them that, is my credit scoring healthy? Is there anything I need to take note of that will actually affect my housing loan? So these are a few points you can keep a lookout for as well. If you are 21 years old and you have just started working for maybe a year or two, and you are looking to purchase your first private property and you do not have a credit card, that is not going to help you. Why? Because you are like a piece of white paper. The banks do not have any record of you, and because you are 21 years old and you are very young, and if you are looking to purchase a property, you don't have any past track record for the banks to know whether you are a good paymaster. So if you are 21 years old and you're planning to buy a property soon, apply a credit card and make sure you actually use the credit card, because that will actually help to activate your credit bureau scoring so that at the point of time when you apply a loan, the banks can see that, oh, okay, you have a credit card and you actually pay on time. That will actually help to smoothen your loan application as well. So if you are doing a transition in your career and you plan to switch a job within the next 2-3 months, and you are also in the process of applying a housing loan, okay, you need to take note that the banks will not be able to recognize your previous employment salary as well as the bonus you have received. Okay, so now we are in January and you actually plan to do a career switch in February and applying a housing loan in March, and your salary for your new employment is higher, and technically you are able to get a high housing loan. But not to forget, one very important point is that the banks will not be able to take in your income tax of last year of what you have declared, because maybe last year you have a very good bonus and you have maybe 3 to 6 months of bonus, where the bonus amount actually results to maybe, example, 60,000, 80,000 or 100k in totality of your annual package, and you have a switch of job. The banks are not able to take in your bonus. They can only base on your new employment salary. Example, previously it was 6,000, now you are 8,000 of salary. They can only base on your 8,000 salary, and they are not able to take in your bonus. So if you are in a transitional career, make sure that you actually secure your purchase first, make sure everything is completed before you do a career switch. Okay, this is interesting. A lot of people didn't know that if you are a salary worker and you actually decided to switch to a self-employed, that means you set up your own business, you are going into your new venture of entrepreneur. Okay, be it a property agent, insurance agents, or you are starting a new tech business or any kind of business, and you actually do pay yourself a salary, you have a CPF contribution, the banks are not able to recognize your income at all if you have a career switch to an entrepreneur or a self-employed, because there's no certainty of what will be your income moving forward, and the banks are not able to grant you an approved in principle. So if you are also planning to switch to a self-employed or entrepreneur, make sure that you have been running your business for more than a year. So let me give you an example. So if you decided to quit your job in March and decided to set up your own company in April to run your own business, and you have 7 months of good salary crediting, you pay yourself a good salary because your business is doing well, a lot of banks are unable to recognize your basic salary as a self-employed. They need your business to be registered for one full year. So if you are in the transition to be a self-employed, in order for the banks to recognize your self-employed income, it must be a full 12-month cycle from January to December. It cannot be from April 2022 to April 2023. They are unable to take in your full income based on self-employed starting from April. So the incorporation of your company makes a difference. If you have registered your company before December 2020, you are safe. But if you started your company after the calendar year, example 2021, March, April, February, the bank is unable to take in your income as a self-employed. So this is something you need to be aware. And at the point of loan application, sometimes the bankers do not go in depth. They do not, if you do not declare to the bankers you are self-employed, they will just take you as salary worker, and they will based on your CPF contribution and your pay slip to grant you a loan amount. But only at the point of time when you have OTP and they go in more in depth on credit assessment for your loan, if they found out you are self-employed, they will not be able to grant you a loan. So make sure that if you are self-employed, do declare to your bankers when you are applying the mortgage loan. So over at Keyquest Mortgage, we actually do a one-to-one consultation to understand your past employment statements as well as your current, and we will also make sure that if you're self-employed, we'll find out when you actually incorporate your company, and will the bank be able to take in your income when you're applying loan. So that makes you stands a higher chance in securing your mortgage loan with Keyquest Mortgage. So if you find today's video useful and you have learned something today, in order for us to make more creative videos and more in-depth information for you when you're applying a housing loan, please hit on the like button and subscribe to our channel. Once again, my name is Kenneth from Keyquest Mortgage. I'm looking forward to create more interesting content to help you in your loan application journey.